The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Friday, the 16th of October 2020. On the podcast today, Russ Mould, Investment Director at stockbroker AJ Bell, talks about coronavirus, the current lockdowns, the economic fallout from that, and also covers Bitcoin. Plus, Chris Wickham, equity analyst at Equity Development, talks about Cakebox and Angling Direct, both of which have had updates recently, a trading update and interims. And as always, at the end of the podcast, I'll have two lists for you: the top 5 most liked RNSs and the top 5 most followed companies. You can see top 10 visions of these lists at voxmarkets.co.uk, where you'll see a whole bunch, as the Americans say, of other content. In fact, there's one there on Zephyr Energy, another one on Net Scientific, another one, in fact, a video there on tech capital portfolio company Lucid, and an article there on Deep Matter, securing 5 major contracts. Check that out at voxmarkets.co.uk. Also, let's look on the COVID-19 index, which is on the front page there. Biggest rise today, Novacyte, heading towards 10 quid, that. Inevitable. It's £9 at the moment, £9.10, up 8.33. And biggest fall is Inspiration Healthcare, down 5.8%, 65 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Russ Mould, Investment Director at stockbroker AJ Bell. You all right, Russ?
Yeah, in good health, thank you. How are you?
Yes, I'm all good.
Good.
But I'm just sick of the COVID stuff, you know. I'm really I've hit that really tired by it, you know. We're getting worn down by it. I mean, come on, please. Let's get some kind of vaccine or therapeutics out there so we can, you know.
Yeah, I'm not holding my breath on a vaccine, given we haven't got one for SARS, and that was nearly 20 years ago. So I fear that may be a bit of a shimmer, if the truth be told. So I'm not. It's so great, and I look forward to being proved wrong. But these things generally take time, and just to knock something up in the space of a year would be highly unusual, I fear. But yeah, it's a very difficult situation. You know, we have the advice from Sage and Chris Whitty, who walked past me in the street in Lewis 2 weeks ago, I hasten to add.
It didn't say hello to you? How about
no, he didn't.
How dare he?
I left him to it. He looked at me and I looked at him, and he knew that he'd been clocked. And I thought, poor chap's just walking along, enjoying a cup of tea. The last thing he needs is me papping at him. Anyway, I was in a rush to get to the pub. So, since things are still allowed in Sussex at the moment. But, you know, his job is physical health.
Yeah.
That's it. That's his job.
Yeah.
The government has got to think about financial health, because let's face it, if you lose your job, you're gonna, you know, your mental health and your physical health are probably going to suffer anyway. Yeah. And so there is that difficult balancing act between financial health, mental health, and physical health, and there is no right answer. I think what's grinding you down and making me grind my teeth is that, you know, that there doesn't necessarily feel like there's a plan, and that policy is being changed on a fairly ad hoc basis. I guess in defence of Her Majesty's government, and you know, John Maynard Keynes said, "Look, when the facts change, I change my opinion. What do you do?" And I think that's fine. I think what bugs me is somebody who spends a lot of time looking at spreadsheets. Is I don't know what facts I'm being presented, and I think, you know, are we looking at cases? Are we looking at ICU admissions? Are we looking at, heaven forbid, deaths? I mean, what's the key KPI, as it were, to use a horrible phrase? You know, what are policies being based upon? Because it seems to switch from one to other, and there doesn't seem to be particularly consistent view there. And I think that's what I'm finding difficult. I don't get a sense I'm getting a lot of context. Cases are up. It sounds terrible, but is that because we're testing more?
Well, exactly. But you're right. I mean, testing on average 10 times. As we used
students getting a real punch on the beak about this, but that's because as soon as they get a sniffle, they're being tested.
No, that's right. The stats are hard to go by, aren't they?
I can't get behind the numbers. And why, with a healthcare system like India's and Africa, India's cases are high, but the death rate's very low, and Africa equally so. So why is that? Is it? One person's written a blog saying it might just be because there aren't very many old people there. because they don't. I mean, you think, God, somebody committed that to print, and please don't troll me. It's not my view, for heaven's sake. But I think what he was trying to say was, you just need to get behind the numbers and not just look at cases X. Well, it's like saying number of bananas consumed in Tooting Y. I mean, it doesn't mean anything unless you have a trend, and what's the background, the percentage of testing, the percentage of cases relative to testing, percentage of deaths. And I think that's what I'm finding. I'm assuming, hoping the government have got all of that, in which case I'm a bit stunned as to why they're not showing it. But if they are just moving from indicator to indicator just to try and whack-a-mole, then frankly they shouldn't be running a crab shack on Brighton seafront, let alone anything else.
I often think, what do we know? And I so far, what we know is testing has gone up massively. In fact, it's about 10 times as much testing going on now as it was during the peak back in March.
Good, yeah.
So we are seeing more cases, but they're not more deaths going up. But then they say, yes, we could have more deaths going up. So we don't know that yet, though. So, and then somebody says, we've got a full lockdown to bring the numbers down. I say, well, hang on. It didn't work last time, but this time we're more prepared as well. We have anti-therapeutics, we have the beds available. There's hospitals that haven't been used.
Hospitals are better, are more aware of what they do, more prepared.
Yeah, so I don't think a blunt sort of like an instrument locking everyone down when I think we can cope with this one, because there's. To be honest, the thing was, the first time round they didn't protect the vulnerable. That was why the death rate was so high.
That was the bizarre thing. What they actually did was they locked all the vulnerable together, and it was just like,
it's like a wildfire going through the old people's homes. So that's not going to longer happen because we're now more prepared in that area. Yes. And so I'm just thinking a full lockdown is only. I agree with the government on one perspective, saying that scientific aspect is say lockdown, but the economic aspect is as big. The problem from that is as big, if not bigger.
And also, you're getting people who have other illnesses who aren't getting treatment. So yes, you can focus on one thing to all exclusion, but there may be damage done elsewhere. So it's just not easy. And I appreciate they're in a very difficult position, and it's easy. And I'm glad I'm not involved in taking the decisions at all. But I think in the end, what's grating on you and me is that we don't get a sense that there is a consistent. This is the data that we're looking at. This is the context. This is the trend, and this is the policy that we're producing accordingly. It rightly or wrongly, fairly or unfairly, it comes across as a little bit more ad hoc than that. And I appreciate you've got lots of pressure from other politicians in your own party, other parties, from local authorities, from press. You're going to, whatever you do, you're going to upset somebody, and that's not easy. And in the end, we are dealing with politicians who, dare one say it figuratively and literally, think through their seat sometimes, because in the end they'll be thinking of polls and how is this going to look in X years' time. And there is, the pressures that are being brought to bear upon them are considerable, and it is not an easy choice. But I personally wouldn't agree with a national lockdown, no, because I think there will be considerable collateral damage there. But equally, I saw a poll yesterday where apparently there was nationwide support for one. So what do I know?
Yeah, that's right. I think it's something, sort of facts we don't know, or
that's what's grating on me.
That's the problem with people saying agreeing with this and that. And I read a very interesting article saying this flare-up, the second flare-up, the second wave, is good for developing a vaccine, because the reason why SARS didn't get a vaccine is because it petered out pretty much. There wasn't as many cases, and they couldn't get the volunteers.
I hadn't thought of that.
Yeah, so it's oddly, it's not a bad thing that we have a bit of a surge, because then we can keep, because obviously they're testing. It's like J&J, for example, 60,000 people are in their clinical trials. That's an amazing amount of people.
That is a lot.
And they've had one adverse reaction. You're going to get that. And they said, well, people get ill anyway, even if they're on placebo, people get ill from time to time. So that can happen. So, so I think they're confident getting a vaccine, but how effective it'll be, I don't know. But
I mean, clearly, I think that having a flu jab does decrease your chances of getting a particularly bad case. But I think expecting anything that's going to be 100%, I think is pretty unwise. But I think anything that improves your chances of not getting it, or handling it more effectively if you are unlucky to get it. But then I see the survival rates, if you're unlucky enough to get it, are still extremely good. Even if all right, once you move to over 70 years old, the rate drops to about 85%. But that's not bad. But if you're a student, your chances of getting rid of it, I'm told, are 99.98%, which I think is, I would like to think of, for their sake, pretty good, all things being equal.
Yeah, and did you read, I think yesterday, that Russia has now released a second vaccine. They've only tested on 100 people, but they're confident it works.
Okay, good luck with that.
100 people, I know. I wouldn't want to be the 101st person to test that.
No, I wouldn't either.
Marvellous. Okay, what are we talking about today? Russ, what have you been looking at?
Well, one of the... I don't know whether we've ever talked about this before. I know we've talked about gold a bit before, which is again, a very binary discussion. People either like it or loathe it. And I think probably cryptos are even more that way. And I think it caught my eye because just as we were doing last week's, the Financial Conduct Authority put out a statement banning the sale of derivative product and exchange-traded note trackers to retail investors related to cryptocurrencies and Bitcoin, just saying because of the inherent underlying volatility of the asset and the difficulty that you have in valuing it, which I thought was really, really interesting. So the regulators come out saying, actually, we're really not so keen on this. And yet at the same time, in the very same week, the Cleveland Federal Reserve's boss, Loretta Mester, said that the Federal Reserve is continuing to experiment with digital currencies and explore payment of digital payment straight into a digital account that everybody would have in America with the Federal Reserve.
Yeah.
And the Bank of Japan said that it's continuing to experiment with central bank digital currencies, CBDCs, another new jolly acronym for us. And it's going to roll out an experiment this year with a select number of households and companies. So I thought that was an interesting juxtaposition. And at the same time, Bitcoin went back above $11,000 for the first time in a while. So it's actually, since the spring carnage, bounced back quite strongly. So, first of all, you've got some people who ask the question, is it money? Is it a store of value? Can it facilitate transactions over time and distance? And is it trusted? And that's your first discussion to have. Yeah. And then, is it an investable asset? Does it have intrinsic value? Warren Buffett would say, well, no, because you can't do a DCF on it. It's just a string of ones, notes, and digital code. Pah. It doesn't have a yield. Pah.
He said that about gold, doesn't he, though? He said that about gold.
He does, and he has bought some gold miners.
Exactly, yeah.
But again, they can have an intrinsic value because they can generate cash, is his argument.
Yeah.
But equally, you can argue, well, look, if somebody thinks it has a value, then maybe it does, And at a time when none of us are using cash, that I've noticed, and we're all using either our smartphones or our debit cards in person, let alone online. Yeah. The concepts of physical cash and intrinsic value and let's face it, paper money's got no intrinsic value anyway. Yeah. Walk into the Bank of England and hand it up and saying, you owe me £5 of silver, they'll kick you straight out. You won't get very far there. Yeah. So, but now we can be saying, just because somebody thinks it has a value, well, that probably got some Dutch tulip traders in trouble about 400 years ago. But nevertheless, there is clearly a band of people out there who think that there is value to be had. And so once you get past, is it money or an investable asset? Well, if you think it is an investable asset, well, what's the case against fraud? There's been lots of them, Mt. Gox and Bitcoin wallets disappearing, but fraud's not exactly limited to that. I mean, cash disappears and banks get robbed and goodness knows what else.
Yeah, but do you know what? The actual Bitcoin itself, the blockchain, has never been hacked. There's only people's accounts that hold blockchain in. So it's like like you say there, someone's bank account being hacked rather than the money itself being frauded. It's actually the platform itself, So yeah.
There you go. So there's no intrinsic value, which I think is what the FCA was saying, which I think is a big definite thing that people need to be aware of. Yeah. And let's face it, you can't yet really pay for your groceries with it, which if you're looking for sort of mass adoption, or you can't pay your tax with it. There's no point being a Bitcoin billionaire if you can't pay your tax, right? Because you're going to go to jail. HMRC aren't going to accept Bitcoins, they're going to want pounds. Yeah. So I think that there are still some big barriers there. Equally, on the plus side, you'll have libertarians talking about, freedom in developed countries, let alone corrupt ones, you're not being tracked. The big selling point for lots of people is the supply is limited to 21 million Bitcoins, right? So at a time when you've got government budget deficits going through the roof, you've got either US president coming in promising to spend squadrillions of money, you've got QE still going on, and that's before, a cyclical recession, let alone the problem we've got now. And you are seeing increased use and adoption. I think Starbucks now accepts in the US in certain stores, for example. So you are getting a little bit more use. And in the end, people don't use gold to pay for their Starbucks either, that I'm aware of. So it would be rather tricky if you did. So those are the cases for. I think what really has caught my eye though is Grayscale Bitcoin Trust in America is all right. ETFs aren't allowed. Yeah. Trackers, but there are some trusts and funds in America, and they are growing and they are hoovering up Bitcoin. Which, given that there is a finite supply. It's quite interesting.
Yeah.
So you've got potentially, and Fidelity have just come out giving papers saying they actually might be thinking of a strategic allocation to it because of concerns over money printing and budget deficit. So you could end up with a bit of a wall of money argument. Now, you've obviously got to be very careful because that didn't do the Dutch tulip trade as much good in the end. But it's going to be an interesting one to see how it develops over the next 6 to 12 months, which is why I just thought I'd flag it. And in the end, Bitcoin's current market cap, by the way, is double that of AstraZeneca, which is the biggest stock in the FTSE 100. So it's either, so if anything goes wrong, then long way down. But equally, finite supply and lots of people sniffing around, getting interested, institutional investors getting involved. You could kind of see what could happen potentially.
Yeah, well, do you know what? It's what you said there. Do people value it? And it's like gold at the start. Why did people, pick gold as the standard? Because there was plenty of shiny metals around, And
yes.
all of a sudden, once people start believing it, it gives it value, doesn't it? And like I said, the bigger the adoption, and like right now, Bitcoin, people are saying, it's been one of the best performing assets, if it is an asset, for the last 10 years. And so you get fund managers saying, well, why didn't you get exposure to that? Or the clients to fund managers saying, why didn't you get exposure to Bitcoin? Because there's other funders and they're doing very well. So if you get that kind of pressure from investors, there's going to be more people adopting it, isn't it? And that in turn gives it value,
There we go. So we shall see. I mean, some people just say it's a Ponzi scheme, because that's kind of how Ponzi schemes work, right? More people come in, but nevertheless, I'm intrigued. Just looking at it entirely dispassionately, I'm intrigued.
I think it's something in it. I mean, it's not, like I say, it's too cumbersome. It's got its frailties as far as being a currency. It takes a lot of power, a lot of electricity
the mining's
for mining.
expensive. I gather it's nowhere near as quick as using a Visa. Can't process as many transactions as Visa, and I gather the commissions are quite expensive as well. So there are genuine obstacles to mass adoption, plus the tax and grocery issues as well.
Yeah, and it was like, I think of all the cryptocurrencies, Bitcoin it was like 90% of all cryptocurrencies. Bitcoin's dominance was 90%. Now it's down to about 60%, and so it's slowly that other cryptocurrencies, they're a bit more flexible.
And I guess that's the counter argument to the Bitcoin scarcity, finite supply argument. Yeah. There are now over 3,600 cryptocurrencies according to CoinMarketCap. So these things are breeding like rabbits. If that's the case, then there is no scarcity. So that argument then gets a big kick, which is why I'm just sat on the sidelines, twiddling my thumbs, thinking, let's just see how this one works out. Yeah.
I mean, the guy. One final thing. I remember the guy from. He's now, I think, the CEO of Space Atlantic. What's it called? Space Galactic. The Virgin Space thing. He did very well. He's an entrepreneur. But he said, just have 1% of your portfolio in it. It's worth it just for long term. He said, just in case it goes bananas. So and he's done quite well out of it.
He's done all right, I suppose. There we go.
Marvellous, Russ. Thanks for that.
Keep well.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is an equity analyst at Equity Development. This is Chris Wickham. You all right, fella? How's things?
Yeah, things pretty good, actually. Yeah, I'm enjoying life.
Yeah, well, last time you came on, you covered Cake Box. I said, well, next time you get some news out on that, come back and talk about it. So the Cake Box have had some interim results out, and so we'll dig into that. Before we do, as always, if people didn't hear the last podcast or are not familiar with Cake Box, there's a huge hint in the title there, Chris. But just give us a brief summary, Cake Box's business, where they're based, etc., and who they sell to, if you could.
Yeah, Cake Box is headquartered in Enfield in North London, and they operate now 140 franchised stores in the UK, which sell egg-free celebration cakes that with fresh cream on them. Absolutely delicious.
Yeah, excellent. And how many shops did you say they had there?
They've just got up to 140 now. They had 139 just before their pre-close, but I'm told they've opened another one since.
And they're on about a 70 million market cap. They've just had a trading update they released, didn't they?
A few days back. Trading update they had, which had a couple of good numbers in there, showed that they had 12.1% like-for-like growth and 81% growth in online. So it's really moving very, very well.
Yeah. We were talking there. You got a theory about retail and all that stuff and consumers, and take us through it. And I'll play devil's advocate.
The gold standard, in my view, is that you want to find companies when they're consumer facing that are capable of growing in the mature markets of North America and Western Europe, because those are the ones which carry the lowest level of economic risk. And it's quite hard to do. I mean, the very large companies that are consumer facing typically make things that people don't want to consume more of. I mean, they're very rich, big companies, but they're making things like beer, distilled spirits, cigarettes, and food, and very often sort of processed packaged food, which most of us, I think, we consider that we shouldn't either consume any of those things, or that we probably don't want to consume more of them. So it's quite important to find products and find ideas which people are quite happy to consume more of. And one of the great things about cakes and celebration is it's not something you're doing so frequently that it's likely to lead you, to be putting on a lot of weight, or to be, in particular if you buy a cake for somebody else. I mean, nobody got fat because they bought everybody else cakes. Whereas everybody jokes about the person who ate all the pies. Yeah. So I think it's definitely, when something associated with celebration, it's not something you'd really say, well, that's part of your normal diet, and you should start cutting that out.
Mm-hmm. What about so Greggs, for example?
I think that's at a very different end of the market, and it's quite an interesting comparison with Greggs, because I always think of Greggs as a company that started in the north and then came south, and actually, most of their products seem to shed a few calories every time they sort of hit a critical geographic point in the UK. I mean, it's just the actual mix in their product range got a little bit lighter when it got to the M62, and then even lighter when it got to the M25. Whereas Cakebox is a company that started in London and in Enfield, and has gradually moved north and is expanding outwards. But yet the products are priced the same, and they are the same all over the country.
So you're saying so businesses that are sort of focused more on celebration treats like say Cakebox or Hotel Chocolat. In fact, what was the big sort of, I suppose, fever tree, I suppose, in drinks, wasn't it? In mixers was the big sort of star story of the last few years. And I suppose that's more of a treat thing, isn't it? Where you wouldn't have one of those every day, I suppose, unless you could. But it's, yeah, so I think that plays into your... So you're saying there's businesses that play to the sort of, unhealthy side of your lifestyle will not do that well over the long term.
Well, it's a bit like when Matt Hancock got busted on Good Morning Britain munching a stroopwafel, and his comment was, "Well, it doesn't matter I'm eating a stroopwafel because I only do this once in a while, and tomorrow I'm going to go jogging." Yeah. So it's a question. You can fit indulgences and treats and celebrations into a healthy lifestyle. It's when you have habitual behaviour, which might be around, say, alcohol or certain packaged foods and tobacco and things like that. Those are the sort of things which are an absolute no-no. But no one in their right mind would ever tell you, to stop celebrating. And celebration cakes are perfectly compatible with a very healthy lifestyle.
Yeah, and do you know what I find the hardest thing ever? In fact, people throw away this phrase, everything in moderation. People throw that away like it's easy, like moderation's easy. Humans... Literally, we operate on extremes a lot of the time. It's very hard to have one pint, or one chocolate biscuit. And that's right, everything. If you can conquer moderation, you can conquer life. Generally, if you can exercise, for a certain amount of time every day, eat a certain amount of food every day. But it's not easy, is it? So, I mean, I think you're right. People will not have, like I say, hundreds of cakes. They can't put up with it. They can't do this. We'll go from one extreme to another. So that's why we go from overeating in Christmas to starving ourselves and going to the gym or starting a new gym in January. We are like that. But so you're right. We need something that's easy to have every now and again, but doesn't kill us too much.
Well, and cheers you up. I mean, there's nothing nicer. It's not because we're not talking about very high budget items and that sort of thing. But if you've got a family that's in lockdown or something like that, and everybody's getting a bit depressed, and you run out of things to watch on Netflix, what could be nicer than having a delivery of a fresh cream cake?
Yeah. So, Cakebox, and what do you what thoughts on that? To trading update?
Well, the trading update, as I said, was good. I mean, the like-for-likes were very strong. The online number was very strong. The new store openings are very strong. And then when I look out and I take my lens to look into the future, then I'd say, well, you've got an enormous amount of scope to grow here. I mean, the first thing is that if you had the same type of penetration for their stores across the whole country as you do in Greater London, they could easily double the size of their estate. And the reality is that they're not even at saturation points in Greater London. I mean, obviously they mentioned recently they opened a store in Barnsley, which is up in the north in Yorkshire. But at the same time, they're opening in Staines and in Tolworth, which are both in Middlesex. So it's quite quite a change. So there's no saturation, and certain parts of South London there's still plenty of room to open more stores. And then clearly, even within the stores, they're doing well because you had this 12% like for likes, and then you've got this 80% growth in online sales. So there's a lot going on.
Yeah,
that's growth. And the other thing about retailers is that if you have a franchise model, it's the franchisee and it's their franchisees who are putting up the capital, so you don't run out of money as you grow the estate. And the other thing, there's an enormous amount of problems trying to get businesses on the high street to be profitable. And if you've got a formula that works on the high street, like Cakebox has, there's no shortage of sites that you can go and fill because, as everybody knows, the high street is struggling and people are struggling to pay the rents. Yeah, their franchisees aren't.
Yeah. Okay. There's another stock you want to talk about, which I know a few people I know on sort of Twitter have had holdings in every now and again, and that's Anglian Direct, ticker ANG. What's the market cap there? Is it around about 40 million? Is that right?
It's 48, yeah.
48,
and
okay.
They've got, which is roughly, it's a little bit under their sales value. So they're roughly trading at, what we call enterprise value to sales of around 1.
Can I just say, are they on? Are they just online, or do they have stores? I know
they've got stores. In fact, if you looked at the interim results, you saw that the online grew very quickly. It was up 62%, but the stores number actually that advanced as well because they're opening more stores. That advanced by 2%. Yeah, they got 36 stores in the country.
Okay. This is it's Anglian Direct could be, it's one of those things that before you look at the business, think that could do well because it's a very niche but popular hobby, isn't it? And it's something that has a lot of kit, a lot of equipment's needed. I'm assuming quite a bit of a recurring kit is needed in angling. I'm not I don't fish that often, but first on the surface of it, would think that may be good a business, depending then though on the competition. So, but look at their figures. It looks like a lot of double-digit gains here, percentage-wise. It looks good. Is it good or what?
Yeah, well, the reality is that fishing is very specialist. I mean, by different disciplines, whether it's coarse or fly or sea. Yeah. But they basically have 21,500 different fishing tackle products in their offer, and if you're fishing, you want to get exactly what you need. I mean, so there's no point in having a discussion and saying, what kind of fly would you use on a particular river to get the trout on that river if you then can't actually get exactly that fly? So it's a very specialist subject, and it's a very, fishing is, it's about the equipment, it's and people who are really keen on fishing and people who spend a lot of time fishing will always go top of the range and get decent equipment. And the most important thing about any hobbyist is you don't want stockouts, and the best way to ensure that you don't have a stockout is to have online. So as I say, they've got 36 stores, but it's also worth knowing that they've got a 30,000 square foot distribution centre in Norfolk. And as I say, they can get 21,500 different fishing tackle products to their customer base.
Wow.
And again, with fishing, I mean, it's a pastime. I mean, and again, this is something you can always add. I mean, it's a very healthy thing. You're outdoors. As I say, if no one ever got fat on the fish that they catch, because a lot of it is catch and release, and if you do get an eating fish, it's a very healthy thing to have. So that's also that there's none of those constraints that we were talking about earlier on their growth outlook.
Yeah. But I mean, just going through some of the figures there. I mean, have they got debt or something or what? Because revenue's, I suppose, the net profit before tax is 1.4, but that's up 1.4 million, up 250%.
There were some big growths in the profit drivers. I mean, the gross margin was up a little bit, but the actual two main profit numbers were more than double the EBITDA and the pre-tax. But then to get this as a company, that's had some a couple of years in loss. But there's debt's there, but it's not enormous in terms of the size of the market cap. I mean, it's about 10% of its market cap is the debt.
Yeah, and so I'm looking at, is this, I suppose, if you're looking on, if you're valuing them on profit, then they are quite a highish multiple, but that seems like excellent growth figures. But are you saying that's come from a rough period, or, an easy comparison from last year, or what?
Oh, so that this has been a very, very challenging year for anybody who's been in business at all, and then anybody who's been consumer facing. As I say, the online business in that period advanced by 62%, and then the stores business actually advanced by 2%. So, by being active and adding sites and everything like that, they've managed to keep their bricks and mortar business on track on growth. But the reality is that the company itself wants to have a combination. They don't want to be wedded to one channel, and so therefore you will see more stores opening. The latest example, they talked about Warrington, Bristol and Northampton. You'll see more stores opening, but at the same time you've got that fallback of online. So, and don't forget that with fishing, there's a significant amount of education in fishing, and then one of the things that they want to be able to provide is a best-in-class education, which cements the relationship that you have with the actual anglers, and that's something that's quite positive when you look forward, and just underscores the nature of the business.
Yeah. I suppose they could do that all online, though, couldn't they? Surely they could have a dedicated sort of channel or something, YouTube channel, where they could any advice, because I'm assuming, but let's be honest, before online came along, people would say you'd never buy clothes online, so you have to try them on. And then you got some of the most popular or best performing stocks around, like Boohoo and JD Sports and all those kind of stocks that sell clothes online, and people are happy with it, so you can send it back. But with I'm assuming with fishing equipment, you don't really need to try anything on, unless it obviously is kit and stuff. But it would work online as well, wouldn't it? Very well, I think.
I think for anybody who's got a dream of catching some fish, to go into a specialist angling store, it's like going into an Aladdin's cave when you've got so much equipment and so much stuff. But as I say, it's all to do with the education, and so certain people will need that level of education. So therefore, it's important to have your physical presence. But at the same time, if you've got somebody who's an absolute expert and wants one particular one of those stock keeping units, one of those fish tackle products, and they're very specific, then of course having the online means that they, number one, they can get exactly what they want, and then two, as that habit forms, they'll start to buy online. So I think it's very well placed from the ability to use your stores as that place of education and to build that recognition, but at the same time having the online because it's a modern way of shopping.
Yeah, and what do you think going forward? The outlook there, are they bullish, or are they conservative, or a bit worried?
I'd say they're reasonably upbeat about the way things go. I think everybody's being very realistic about the challenges that we're facing with COVID and other sort of uncertainties that come along the way with the consumer. But I feel, again, it gets back to my theme at the beginning of our discussion about finding good businesses which can have a look at which are able to resonate in these developed countries with a very developed consumer, and yet still manage to get some revenue growth, to get volume growth and revenue growth.
Yeah. Okay, marvellous stuff. That's Angling Direct. ANG is the ticker there, of course, and just close to 50 million market cap. Marvellous stuff. Chris, thanks for that, fella, and hopefully we'll speak soon.
Thank you, Justin. That was great fun. Thank you.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5, Blue Star Capital. At 4, Salt Lake Potash. At 3, Braveheart Investment Group. At 2, Ferro Alloy Resources. And at 1, Alien Metals, up 29% to 2.45. So anything else? Braveheart is up 26%. Ferro Alloys down 5%. Salt Lake is up 3%. Blue Star Capital, non-mover. All right, top 5 most liked RNSs are as follows. At 5, Deep Matter Group, strong adoption of IC Synth. I think that's how you say it, or Xsynth. At 4, Two Shields Investments, Kalahari key update. At 3, Braveheart Investment, further update, Paritech Limited. At 2, Open Orphan statement, further media comments. And at 1, Salt Lake Potash, September 2020 quarterly report and issue of shares, basically saying that they're on track still, fully funded for March production, of course, and there'll be turnover, or EBITDA, I should be saying, is around about $111 Aussie dollars per year. That's for one lake. They have 9 lakes there, so they're going from 1 to 3, I think, in a couple of years' time. So lots of upside there. Check that out at voxmarkets.co.uk. Thanks for listening. Much appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.